I'm sure if you haven't seen this movie, you should watch it. It's called Catch Me If You Can. It's a real life true story about a guy named Frank Abingdale, and he was a fraudster and he was brilliant. He impersonated, I mean, he was in the cockpit of an airplane, never had any training.
Welcome, 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 everyone. If we have not met yet, this is my contact information with a QR code presented on the top right-hand side for you to be able to scan and get my contact information. I look forward to connecting with you on social media. Thank you, Michael, for being available today to be able to present to us on the topic of understanding credit. This is Michael's information for you to get in touch with him as a follow-up when you have questions on this topic. Michael and I connect often because we teach as part of the Maryland Realtors. They do have a certification course known as Housing Opportunity Certification. It does offer 4 classes. Each one of them is an hour and a half, where we go through the topic of understanding credit, and you get it for CE. Today, you're not getting CE because it's just an hour and it's a conversation. We then have another class known as Federal Programs that goes through the products that are available for your buyer to use from the federal point of view. State and local programs that pertain to a specific area based on the association that is offering the course, and then Maryland Mortgage Program. And if I didn't already mention it, Michael teaches the 4th class known as Understanding Credit. Michael does also teach this class for others. So you can find him online or when you connect with him, or you'll be surprised the next time when you are taking a class, he will be the one teaching it. Welcome, Michael. Thank you so much, Mike, for doing this for us. Take it away.
Thank you, Brenda, for having me. Absolutely. I got into the credit business over 35 years ago now, and I worked for a few companies. The last 5 years, I took the knowledge I had working with the credit bureaus and brought it to Southern Trust, and I am now their credit specialist. And my job is really threefold. I help all of our loan officers in our 20-some offices analyze the files and help buyers get their scores up quickly. And if you look at this first slide, you can see we're able to actually get scores up in 72 hours. And I'll talk about that process and show you some live examples of some recent cases where we were able to get the scores up quickly. Very, very good news. If you haven't heard already, this next slide, as of July 1st, 2022, a little over a month ago, the 3 credit bureaus have decided that any paid medical collection will no longer be on a credit report. This is unbelievably great news. In the samples that I'll show you in a couple minutes, you'll see the impact on the mortgage scores that the medical collection has. So when you pay a medical collection, it's going to get removed. Now we're finding it's taking 30 to 40 days to get removed. So if we're trying to, close a loan and we get rid of and we pay a medical collection, we can still request a removal letter because they're going to give us a removal letter because they have to remove it now after it's paid. And we can do what I just talked about in a 72-hour time period. We do what's called a rapid rescore, and we get it off of there and get the scores up very quickly. The second part of this flyer is the first quarter of next year, all medical collections that are under 500 will not get reported. This is really good news. There's a lot of medical collections for $50 or $25. They're not going to be on credit reports anymore. Why, you might ask, did this happen? Well, it all started back in 2015 when the 3 credit bureaus got together and formed a National Consumer Assistance Plan. And it was to make credit reports more accurate, and they were working together to help people that are victims of fraud. And they realized that medical collections have been an issue. And I've been fighting it for 20 years. I've been helping customers get paid in removal letters or deletion letters because my opinion is they shouldn't have ever been on a credit report because a medical collection is not credit, in my opinion. But they're realizing that many of them were medical insurance mix-ups. So they're taking steps to fix the problem. They started, like I said, back in 2015, and I'll show you a slide on the National Consumer Assistance Plan down in a couple minutes. But again, this is very good news. It's going to help buyers that have medical collections, which I can tell you, I look at many credit reports a day, and I see medical collections all the time. There's many models of the credit score. FICO has 100 different score models. There's a model for a car loan. That car loan model is only designed to say whether you're going to be late on your car loan. There's many different models. What I categorize them two ways for our purposes. One is I say we have consumer scores. They're not really called that. A consumer score would be Credit Karma. Discover gives you your score. Everybody's given scores now. That's usually FICO 8, 9, or 10, the newer FICO models, which are calculated completely different than the older models. The Credit Karma models, they don't count medical collections quite as much as the other models do. If you look down the bottom, I have mortgage scores. They're not really called that, but these are the models that the mortgage industry has to use. And look how old they are, from 99, 2004, 2005, FICO 2, FICO 4, FICO 5, very old. But these models are designed for mortgage lending. So these are going to be completely different than the Credit Karma or the score you get at Discover, because these are calculated using totally different methods. They're calculated, I would say, the most strict models. They're going to be lower in most cases than your Credit Karma, especially if it's a low score. What I mean by that, the lower the score at Credit Karma or wherever you get it, the bigger discrepancy it's going to be between that and the mortgage score. So if you pull a Credit Karma, if you get your buyer says my Credit Karma score is 620, we could get 580 because Credit Karma doesn't count those negative items, and it's a low score, so it's probably got some negative items on it. They don't count it quite as much as these mortgage models do. So that's why you'll see a discrepancy between the two models, the models that we have to use and the models that you get, the consumer gets. The other thing to remember is that when you get your score from these places, Credit Karma or Discover Card, Capital One gives you your score. Just about everybody gives you your score now. That's based on a soft inquiry, meaning you haven't applied for any debt. Where the mortgage models, they use hard inquiries. That means it can affect your score. A soft inquiry has no impact on your score whatsoever. So it's another thing to keep in mind and why the scores are different. But I always like to start with this just to bring up the point that there is a lot of confusion out there about the models, especially consumers that aren't as knowledgeable about how these scores work and things like that. But it is getting better. We are getting more knowledge out there, and there is a movement to try to come up with some new models to be used, and that's in the works. Hopefully that'll happen as well, to bring it a little bit more current from the models that we have to use now. So this next slide is just some things to do and don't do preparing to buy. Maybe you have a buyer that's going to look 6 months down the road. What can they do to get ready, get their score ready? Or maybe what they shouldn't do to make their score ideal for when they go to apply for a mortgage. You'll notice the first bullet point says don't close multiple credit card accounts. If you close a seasoned account, there's a good possibility your score will drop because the scores love seasoned accounts that have been open a long time. They don't necessarily like new accounts, but they love those seasoned accounts. So closing one could have a negative effect. I had a buyer one time, he closed everything, all these accounts, because he said, I better close these, I'm applying for a mortgage. Well, his score could have been a lot higher had he not done that. Now, along those same lines, if you have 10 Visa MasterCards, probably should close a few, even if they're zero, because your potential for unsecured debt could be holding your scores down a bit. I always say 3 to 4 major credit cards is really all you need. In my opinion, from looking at reports for over 30 years, I would say that they tend to like the major credit cards, the MasterCard, Visa, Discover, American Express. If you have 3 or 4 of them and a car loan and a mortgage, it's really all you need to maximize your score. Also, keep in mind that I've seen creditors recently, they arbitrarily close accounts for inactivity. So if you have a seasoned account, I would highly recommend using it, paying it, keep it active, because it could get closed. And, if it's a good long-term seasoned account, you don't want that closed. You want to try to keep that open. So the second bullet point talks about disputes. Now, they can be issues in the mortgage process because we as lenders have to get rid of those disputes in most cases. We can do that rather quickly. I have forms that we can use, and in 72 hours, we can submit it and get it off of there, but it can cause delays. So the agencies, your underwriting engines will require in most cases that we need to remove any language that says it's in dispute. The third bullet point really only applies to folks that have a very limited amount of credit. Someone that maybe has one credit card, one car loan, and maybe one paid off another account. It could actually increase their score by adding a small balance to the credit card because the scores want to see recent revolving activity. And under each score, when it comes back, which we'll see in a couple minutes in a sample, it'll list 4 or 5 factors that are having the biggest impact on that score. And sometimes I'll see the factor lack of recent revolving activity as a negative thing. So when I see that, it's usually when they have very limited amount of credit. So adding a balance to a credit card doesn't make a lot of sense, but they want you to prove you can pay unsecured debt. The analogy that was given to me one time was, let's say you have $500 to pay all your bills off this month. Your car loan's $350 and you have $200 in credit card. Well, you don't have enough to pay. What are you going to pay first? You're going to pay your car loan because you don't want to lose your car, right? So for that reason, secured loans, not a lot of impact on the scores in most cases. It's the unsecured revolving balances that really have a big impact. So they want you to prove that you can pay it. So adding a small balance to that credit card, again, only if you have very limited amount of credit, usually young folks that are just getting started. The fourth bullet point talks about fraud. And I could talk the entire hour just on fraud. I do see fraud on a weekly basis. I just had a case where I recommended this guy had a credit card that was over the limit. I said, your score would go up a lot if you could get that balance down, get it down below over to a certain point. And he responded in an email, I don't know what that is. And I looked at it and I said, well, it looks like it's a PayPal account, a PayPal credit card. He said, I don't have a PayPal credit card. Someone opened it in his name and ran the balance over the limit. This was just last week or a couple of weeks ago. So we have a lot of cases of fraud. So just be leery, ask buyers, have they been a victim of fraud? Because they may not have done the right thing. I had a buyer one time close an account because someone used it to get gas in another state. I'm sure that's happened to folks in the past where you've had things on your credit card that weren't yours. Hopefully they reach out to you first and say, this looks suspicious. Sometimes they don't. You should always check the credit card statement. So this person closed the account, demanded that it get closed. You shouldn't have closed it. You should have got a new number, because when you close a seasoned account, again, it can really affect your score. And in that case, it did, because he had a limited amount of credit and he lost his seasoned credit card. I'm sure if you haven't seen this movie, you should watch it. It's called Catch Me If You Can. It's a real life true story about a guy named Frank Abingdon, and he was a fraudster and he was brilliant. He impersonated, he was in the cockpit of an airplane, never had any training. He was in a hospital as a physician. He made money. He was just the king of fraud. He went to prison. He got caught, and when he got out, the FBI hired him. He was so good at fraud, and he worked for the FBI. I heard him speak in Pennsylvania a few years back, and he was really good. The reason I bring it up is he has a new book out about fraud and about modern day stuff that we're seeing now. It's called Scam Me If You Can. Just like the movie, it's called Catch Me If You Can. It's called Scam Me If You Can. You can get it on Amazon. I bought it and read it. And one of the things that I took away from it is he stressed, and I've been saying this for years, never use a debit card. A debit card doesn't protect us like a credit card. Federal law protects us with credit cards. When we have a charge that's not ours, we don't have to, they investigate it. Federal law makes them go out and research that. They have to eat it. You'll notice if you have a Capital One or any of your credit card apps, they're offering free monitoring. Why? Because they don't want to have to eat fraud. They want you to protect themselves. So they're offering free monitoring. Definitely, if you don't have monitoring, I recommend it for everyone. There's other ways to protect yourself, but monitoring is, in my opinion, the best. But I see fraud all the time. I've been a victim twice. My wife was a victim at a gas station. She put in her card and they had a skimmer on the bottom of the screen, and it cloned her card, and they used it at self-checkout at Target, ran up a big bill. That, happens. Look on YouTube. There's a video that you can check how to find skimmers on ATMs and gas pumps. In the county I live in, Maryland, we had an instance where 6 local gas stations all had skimmers in Howard County. This was a couple of years back. So fraud is out there. Protect yourself, and I'll talk a little bit about that in a couple of minutes on how you can protect yourself. The next website you see on the top right, annualcreditreport.com, that right now is weeklycreditreport.com. Because of the pandemic, it's been going on for a couple of years. I'm not sure when it's going to expire, but you can go there and get a free copy of each of the 3 credit reports once a week right now. But normally it's once a year. And what I do is I go there and get a free copy of my Experian. Then I wait a few months and go back to Annual Credit Report and get a free copy of the next one, and just keep going back and forth and getting a copy of each of the 3 credit bureaus. Again, you can do that weekly right now, which is awesome. So take advantage of that. I wouldn't get your scores there. I mean, you can, but you're going to have to pay for them. Where the credit report itself is free, I would just go ahead and get a copy of the report, see if there's anything going on there that needs to be addressed. The last website I have on there is optoutprescreen.com, and I recommend not only buyers but everyone to go to this site and opt out. You know, if you get pre-approval letters in the mail, hey, you're pre-approved for this credit card, it's because the credit bureaus are selling our stuff and they're sending Discover a list of these people you should pre-approve. They also sell inquiries. If a lender pulls a credit report for a mortgage, it's identified why they're pulling it. It's for a mortgage. When you go to a car dealer, it's identified that it's for a car dealer. You're applying for a car loan. So they know what we're applying for. They sell all the mortgage industries from inquiries from today and sell them. And lenders start hounding your buyer from all over the country at dinner time. I had one guy say he got 20 calls the day after he applied for a mortgage. So to prevent the bureaus from selling our information, to stop the junk mail, most of the junk mail, and I highly recommend everyone go to optoutprescreen.com. My opinion is we should have to opt in if we want to get those pre-approval letters and things like that. But it's a great site, and I highly recommend that everyone do that. Any questions? Did I miss any questions, Brenda?
Not yet, but I have one. When it comes to people screening or inquiries, how much does that influence from the lender point of view in terms of how many, I guess, inquiries I have on my credit report?
Okay, those screening ones wouldn't have any impact because they're soft inquiries and they have no impact. So it would only be the hard inquiries. And I'll show you a slide in a couple minutes on the impact of inquiries. Good question.
Thank you. There's one that has just come out. Does opting out affect your score or your, does it affect your score when you opt out?
So that's a great question. And it's one I don't have the exact answer to, but I can tell you, I can't prove it, but on many occasions when people have opted out, their score ticked up a few points. Sometimes it's 0, sometimes it's 4. Sometimes it's 2, 3. I've seen it happen hundreds of times. I've also seen hundreds of times where it had 0 impact. So the answer would be maybe. My theory is because you're not getting tempted to open new debt by getting those pre-approval letters, that your score might tick up a few points. So I guess it just on a case-by-case basis, it could. I've definitely seen it happen. Great question. I don't advertise that it happens because it doesn't always happen. I do see it happen though, quite frequently.
Thank you.
So this little pie chart comes from FICO, and it tells what makes up the score, 30% and 35%. My pie chart from looking at credit reports for the last 35 years would be 50-50. When I'm trying to raise someone's credit score, it's going to address one or two things. It's going to address a high balance on a credit card or a negative item, whether it's a medical collection, a cell phone collection, a utilities collection, whatever the collection, or a recent late. A recent late on one of your credit cards or a mortgage could drop your score 50 points, 40 points, because it's having a big effect. So maybe getting rid of a recent late and I'll talk about how we do that. So my pie chart would look different than this one. It'd be 50-50. Someone asked me yesterday in the class, how can I get my mortgage score? How can I find out what my mortgage score is? I only know 2 ways to get your mortgage score. One is you apply for a mortgage and the lender uses the mortgage models to calculate your score, which they have to. Or you subscribe to My FICO. My FICO allows you to pick which score model you want. I want my car loan, auto loan model, or I want my mortgage model. But that is something you would have to pay for and subscribe to. All right. So this next slide talks about ways to increase your score. People with high scores, they pay their bills on time, no recent lates, their balances on their credit cards remain low. Those are two things that I talk about: negative items and unsecured debt balances, and rarely open new accounts. And then down the bottom of the slide, I talk about, if someone had an issue in the past, that doesn't mean we can't do anything. I just got someone recently from a 491 to a 620. If I'm looking at credit scores that are even that low, obviously, I'm looking at a lot of high-end scores too. If I can get someone from a 700 to a 760, I could have an impact on their mortgage insurance, their interest rate, lots of things. So I'm looking at scores across the spectrum, but I do look at a lot of lower-end scores, and I have ways for helping people reestablish credit, get back on their feet. Maybe they had to file bankruptcy for a medical issue, so they need to restart, and there's ways to do that. But up top, we can get one-time courtesy removals if an account has one late on it. Not if it has 20 lates or 5 lates, they're not going to do. But a lot of times they will. You tell the creditor, hey, I've had this account for 20 years. I've never been late. There's a process to go to try to get, it doesn't always work, but a lot of times it does. And then getting rid of medical collections, getting rid of any collections, I help buyers. How do you approach a collection agency to get it paid and removed, not just paid? And then balances on credit cards. Where do we want the balances? We want them at ideally at least 30% of the limit. Getting to 50% helps, but if we can get the balance to 30% of the limit, we're going to get a good increase. Well, unfortunately, a lot of folks carry balances on credit cards. So getting them down to 30% will definitely get their scores up. Well, many times buyers don't have the money on hand because they have down payment and closing costs. There are ways to get to 30% with no money. Sometimes it just takes getting a credit line increase. That's worked many times for buyers. They had a $1,000 limit and they got it raised to $2,000. That pushed their utilization ratio to 30 or 40%, and their scores went up. It could be just transferring balance around because their one card is maxed out. Lots of ways. Finding a mistake. Sometimes I'll see a mistake that a high credit is listed instead of credit limit. So high credit is high as you've ever been. Limit is as high as you can go. So finding little mistakes like that, we can help buyers even with no money on hand. This next flyer is really a good informational slider just to keep, across the top, your buyer had a short sale, a foreclosure, or a Chapter 7 or a Chapter 13. And then across the left column going down, they're trying to get a new conventional or USDA. It gives you the wait time after one of those circumstances before they can get into a new mortgage. Now, there are some exceptions to this, but this is a general rule of thumb. There's a couple things about inquiries. One is, if you look down the bottom, a mortgage inquiry has no effect for the first 30 days. So remember, it's identified with an MTG or whatever, the account number. When a lender pulls for a mortgage, it knows it's for a mortgage. The mortgage models that we saw on that second slide ignore mortgage inquiries for the first 30 days. So it has no impact for the first 30 days. The Credit Karma models will tell your buyer your score just dropped 4 or 5 points. Well, it could because of that mortgage inquiry, but not the mortgage models that we saw on that second page. Also, there's something called rate shopping. If you go shop for a mortgage and you go to 10 lenders, within a 30-day window with Equifax and TransUnion, it only counts as one inquiry. Experian is a 15-day window with the models that the lenders have to use. They do have a 30-day window on the newer models. So hopefully that answers your question about inquiries. They really don't have a huge impact. I could tell you that people freak out about inquiries more than they should. They really don't have the huge impact that many people think they do. This again is just another informational slide on fraud. When I was a victim, I put these numbers together. I get text from my neighbor, my friend, my family all the time. Hey, my laptop was stolen. What should I do? Or someone tried to open an account in my name. What should I do? Or I got an email from my monitoring service saying that my social was found on the dark web. What should I do? I have 3 steps to take anytime you think you've been a victim of fraud or you have been a victim of fraud. Someone opened a checking account in your name. The first step is always call and put a fraud alert on your credit report. And you only have to call one of these three numbers because by law, they have to tell the other two, put the same fraud alert. And it would read something along the lines, I do not extend credit without calling me at this number. And it protects you from having accounts opened. The second step is I would freeze your credit report so that no one can pull your credit report to try to open a new account. And then if your social was compromised or you think it might have been, I would call the fraud alert department at Social Security. So and I would also go to annual credit report and get a free copy of your report and make sure there's not anything popping up on there that's not yours because of fraud. So those are just some good phone numbers I put. And here's the numbers to put a fraud alert. If you haven't been a victim, you can put a temporary, if you think you've been a victim, you can put a temporary fraud alert that lasts 6 months. If you've been a victim, you need to prove it with a police report, and then you would have a fraud alert on there for 7 years, which protects you.
Hey, Mike?
Yes.
If we go back to the mortgage inquiries, so you have where, just given maybe a scenario where the buyer already started with you, you gave them the pre-approval, for example, and now they have found the property and now it's still within the 30 days and now they're shopping around, and you have a lender who's saying they won't pull the credit because it would impact their score. So now we're getting I guess clarify that for us.
Yeah, as long as you're within that 30-day window, it's still only one inquiry. Now, one inquiry could affect your score, but not a whole lot.
Okay.
So it would just count as that one inquiry.
As long as it's within the 30 days is
right.
The priority. Okay, thank you.
And lenders also have to do a second credit pull just prior to closing to make sure that the buyer didn't, buy a new car or buy furniture. That's a soft inquiry.
Correct.
That's we don't have has no impact.
Okay.
So you have soft and hard. Hard means you've applied for something. It can have a small impact on your score. Soft means you haven't applied for anything. It could be existing lenders can do soft pulls. And years back, creditors were going if Capital One. Let's say you have a Capital One credit card. They can go in and look and do a soft pull and see you have too much credit and lower your limit. They were doing that a couple years back. Now they're raising people's limits without them knowing because they go in and do a soft pull. Has no impact on the score. A refresh report just prior to closing that the lenders have to pull. No impact. When you go to annualcreditreport.com, get a free copy of your report. That's a soft inquiry. No impact on your score. So again, I just think people worry too much about the inquiries. I mean, they can have an effect, but usually not a huge effect.
Thank you.
The freeze, when Equifax got breached back in 2019, the evening news said everyone should freeze your credit report because our information's out there. I think it was 180 million people had stuff out there. Freezing is fine, and I've froze my report from time to time. The only issue with freezing is when you apply for something, no one can do anything. If I have a buyer right now and you send them to me and we pull their credit and it's frozen, we can't see it. We can't see their scores. We can't do anything until they lift the freeze, which they can do pretty quickly. But a lot of times they want to put it back on and then they have to take it back off before that refresh report, and then they want to put it back on. It's okay. What I recommend rather than freezing is get monitoring. Because let me give you a scenario. I have all of Brenda's information and I go in and I apply for instant credit. It probably wouldn't work if my name was Brenda, but I have someone's information. I go in and give all their information. I got it from Equifax, and I have your name, social, and I go to the mall and I buy a suit and I get instant credit at the register. Well, you froze your report, so it stopped me in my tracks. They're not going to give it to me because they can't see my credit report. But I still have all your information, right? I could go after your existing accounts. So that's where I think monitoring is really important. I use one called All Clear ID. There's LifeLock. There's lots of them out there. Insurance companies offer them. There's lots of inexpensive ones out there. Take advantage of the credit cards that offer it. Capital One, Discover. If you have their app, they all offer it right on the app, free. They're trying to protect themselves from having to eat charges that aren't yours. So take advantage of any monitoring. If my wife tries to buy me something, I get an alert because we have a joint account. It says, you approve this charge? I'll say, no, don't buy me that. Buy me something better. But no, we've been a victim, so we kind of protect ourselves probably more than we should, more than most people do, and maybe not more than we should. But in any case, take advantage of monitoring. You can freeze as well. I did mention these secured cards. Sometimes we have to reestablish credit. They had to file for bankruptcy. Now we need to start over. These are some good secured cards that I recommend people use.
So the question would be, most of the times the secured card is obviously sometimes to reestablish or establish credit. And then usually the bank, after a couple of months, now wants to switch it over to give you the unsecured. So usually when you're switching from secured to unsecured, sometimes we close the secured one and then start over with the unsecured card. The premise would still apply in terms of, should that individual keep the secured card because of the history, or I guess it depends?
That was the best question I've had in over 2 months.
Oh, nice.
See, I usually mention that, and I failed to. I usually mention that secured cards will, in most cases, I thought it was 3 to 6 months. If it's a good account and hasn't gone over the limit or anything like that, they'll convert it to a normal account. The ones that I had on that slide, it was my understanding that they'll just convert it and keep the seasoning. In other words, just flip it. There may be some that close it, and that would be, if they do close the secured account and open a new one, I would keep it open. Keep it open until the new one becomes seasoned. And someone might ask, well, what's seasoned? I would say 24 months. You really start to get good seasoning. So after it's been open for a couple years. But I have seen a lot of them will just convert the secured to a normal one. But that was a really good question.
Thank you.
All right. So this is a sample rescore that I did for our Solomons, Maryland office. And you can see this person has 3 scores. And I mentioned underneath each score, there's 4 or 5 factors. They come from a list of 30 different factors each of the credit bureaus have. And these are the biggest factors impacting this score. Why isn't this an 850 score? Because there's serious delinquencies, collection. But if you notice, the 4th thing listed on Equifax, the 4th thing listed on TransUnion, and the 3rd thing listed on Experian have that factor I mentioned earlier, lack of recent revolving account information. They're being penalized because they don't have credit cards. That's where adding a $25 balance would help. But in this case, I want to target the collection. I told this buyer, if you pay the collection and get a paid and deletion letter or removal letter or expungement letter, which I have, by the way, over 450 sample collection removal letters from that many different collection agencies. Because as I said, for the past 20 years, as I've been rescoring people, I've been saving them all and whiting out the buyers and the account number information so that I can share it with the buyer and say, look, this company's given a removal letter in the past. Tell them you'll pay it, but you need a removal letter or deletion letter or expungement letter or no longer reporting letter, whatever letter because if we just pay the collection, we might not get anything in the short term. And now with the news of medical collections, it's just great. So each lender gets 3 scores. They have to throw away the highest score and throw away the lowest score. So my score is 575. That's what we have to qualify the buyer on, because that's the middle score. Well, I need at least a 620 for this loan. So from 575 to 620, that's 45 points I need. So I looked at the report, analyzed it, and said, look, this collection's your major thing, because the first score factor on all 3 is talking about this collection. If you pay that $295, they'll give you a deletion letter because they've done it many times before. And I sent a sample. And they got me this letter. And this was for an insurance company, Progressive Insurance. So it's not just medical. I've gotten them for cell phones, for utilities, and lots of different companies. But you'll see I underlined delete this account. Well, I don't know how long that's going to take. It could take 45. I have had some letters say this could take 6 months. I want to close this loan next week. So we did a rapid rescore. In 72 hours, we pulled a new report, and the new report came back, and my 575 is now a 656. got that many points for that one collection because it's disappeared. So that is a just one little example.
Hey,
Michelle,
Mike,
yes.
how would you challenge the person who's saying, well, you just told me to pay the collections. Doesn't that wake up the sleeping dog?
Not if it disappears altogether, which
Go
is
ahead.
which is what happened in this case. It doesn't wake anything up because it goes away. It's deleted. It's gone. Now, if you just pay it, yes, you're waking up a sleeping dog, because if the date reported, if it hadn't been reported in a year and a half or whatever, and now you pay it, the date reported shows today's date, and that could be negative. That's why we've got to get them removed, not just paid.
So let me make sure I say that again. You're saying if you, the person whom I'm borrowing money from, tells me that I need to pay the collections, I need to pay it off and follow up with the letter for deletion. Is that?
Yeah, we got to get it removed. You got to negotiate that up front before you pay it.
Okay. Yep. And then another one is coming. I don't know if we'll have the answer to this. Why is it that when you pay off the balance, it takes so long for it to be updated? Why is it cannot just show up like my bank statement that I have credit?
Yeah, it's usually reported. Why, I'm not sure, but most creditors report, it shows up on your credit report a couple days after the statement date. So whatever your statement date is, it usually shows up 3 or 4 days after that. Not sure, it's just a process that it goes through. You would think it would be quicker just because it's electronic. Here's what I did on St. Patrick's Day this year, and I finished by the 28th. You'll see I did this whole process with a weekend worked in a matter of a few days. We have a 710 score, a 709, and a 794. Why is Experian so much higher? It doesn't have this collection down the bottom, which is medical. It's $2,873 medical. Why doesn't Experian report? You'll see it says TU for TransUnion and EF for Equifax. Creditors don't have to report to anybody. They don't have to report. Some only report to one. I have some credit unions in North Carolina. They only report to Equifax. Some collection agencies only report to Experian and TransUnion. This one is only reporting to Equifax and TransUnion. So my theory is, if I can make this go away, not pay it, Brenda, and wake it up, but make it go away, I should be at 794, right? Because this collection is what's holding this score down. It says it. It's the number one factor. Collection, right here, collection. But it's not saying that here because it's not on TransUnion. So help the buyer negotiate for this letter on the 23rd, week after we pulled the report. It says paid in full and removed. Can't wait for them to do it. I want to close it. So I sent that to the bureaus. 3 days later, we pulled a new report. On the 28th is when we finished the whole process. And there's your increase. Experian went down. That should say -6 points because the balance might have gone up on a credit card. But look, now the factors don't even mention a collection because it's not there anymore. So the factors change. Every time you pull a report, it spits out a number, and whatever factors at that minute in time are having the biggest impact on that score. I have a couple more I wanted to show you. This is one. Remember, I have to throw away the 682 and the 649, so I only have a 652 middle score. There's a collection, $236. Here's the letter. Removing it May of this year, May 9th, 2022. It says delete. And the after is unbelievable, 760. That'll get me the best mortgage insurance rate. So you can see the impact that these medical collections are going to have on people. Here's the one I told you, 491, 525. I just did this May 17th of this year, finished on June 9th. So it took a little while for the buyer to act on what they needed to do. And if you look, they have a 491, 525, 484. Lots of collections on this report. I only said, let's target the ones I know will give you a removal letter because they have in the past. Capio, Consumer Adjustments, Avante. Capio's twice, Avante's twice. I said, let's just target them. You're going to have to pay them, but they will give you removal letters because they do it. And now with medical, they'll definitely give you removal letters. So that's what we did. And we got all those collections removed. Here's Capio, June 7th of this year. Delete. Here's Consumer Adjustments, May 27th. They got that letter. Avante, they got that letter. We submitted all them to the Bureau. So that 491 credit score, we can't do a loan at 491. And now their score is 621. We can do a loan, 130 points on that. Incredible that medical collection would have that much impact on a score. There's another one, 595 middle score. And again, this is T-Mobile. So again, it's not just medical. And remember, that new rule that started July 1st only applies to medical collections. Paid medical collections will eventually get removed, and existing paid medical collections that are already on your report will get removed. And then in the first quarter of next year, any medical collection under 500 won't get reported. But we're still going to have cell phone collections, insurance companies like we saw, utilities and things like that. So there's still going to be other collections. So this person was able to get me a letter from Amshire for T-Mobile. They had to pay the $590 June 2nd this year. Here it is, T-Mobile. They're going to remove it from the entirety. They've requested that happen. Getting rid of that one collection got me all the way up to 657.
Hey, Mike?
Yes.
When you rescore, if it is after the 30 days, you're looking at their credit again, or I guess.
Yes. So yep. Good question. So scores are calculated on the fly, meaning your score is not saved. You can't call and say, what's my score?
Right.
What I mean by that is when we go in and pull a report, it looks at what's on that report for that minute in time, it spits out a number and those 4 or 5 factors. That number's not saved. That's the score for that minute in time. So if we go in and we fix something, we got rid of a medical collection, we have to pull a whole new report and do a whole new hard inquiry because we needed to recalculate the scores based on that being removed or whatever other update we did. So it is definitely a second hard inquiry, but the impact is going to be so much greater that we got rid of a medical, or whatever we did is going to far outweigh that second inquiry.
And when it comes to the law that is already in effect as of July 1st with the medical, the part of the consumer, I don't need to do anything in terms of medical collections, or I need to also send them a letter requesting them to remove it?
A couple things. One, it's not a law.
Oh, sorry.
Yeah, not yet, but hopefully it will be. It's just a policy that the 3 bureaus put into place. Secondly, you shouldn't have to do anything, but it's taking some time. So when you pay a medical collection, I had one that was paid in the beginning of July, and a few weeks later it was still there. We did an annual credit report soft pull to see if it was still there. So if you're trying to close a loan, we just say go get us the removal letter and we'll do a rapid rescore and get it done now, rather than wait for it to be removed. So you shouldn't have to in the long run. If you're not applying for a mortgage, once you pay it, it should get removed. But you want to periodically check by getting your free report to make sure it's been removed. But getting a letter is always the best way. So here's what I did just 2 weeks ago, July 26th, and finished it on August 5th. So you can see we pulled a report for the first time on July 26th. By August 5th, we're done. We got the score where we need it to be. So that's how quick it happened. This person has a mortgage. Their score is 668. I was trying to get it to 680 for a grant because, there's magical numbers, 620, 640, 660, 680, 700, 720, 740, 760. Every 20 points could have something. In this case, the grant we were trying to get this buyer, we needed a 680. So it says serious delinquency under each report. It doesn't say collection. It says serious delinquency. There might be some other delinquencies. It might be a collection, but they're really concerned about what? They're concerned about this mortgage that has a 30-day late in May of this year. Remember, we just pulled this report in July, so a recent late kills your score. So what did I tell this buyer? I said, call them and try to get a one-time courtesy removal. It doesn't always work, like I said earlier, but many times it will. In this case, the buyer called and said, hey, I've had this account since February of 2020. You can see the opening date right here. I've never been late. This late was because I thought payment went through or whatever. Would you give me a one-time courtesy removal? Buyer got me this letter August 3rd of this year. it says, as a one-time courtesy removal, we've requested they suppress the May of 22 report. That's good enough. It doesn't have to say delete, remove, expunged. They've gotten rid of that May 22nd as a courtesy, a one-time courtesy. Never hurts to ask. So did I get the 680 by getting rid of that late? That 668 score? You bet I did. I got the 702. That's how much of an impact that recent late was having on the score. So I'm helping buyers with one-time courtesy, getting the removals, and many times trying to get those credit card balances down. They're the biggest thing. And by the way, I mentioned score. Here's the new mortgage trade line that doesn't show any lates now. I mentioned that your scores are calculated on the fly, right? And Brenda asked the question, you have to pull another report. We definitely have to pull another report, but it's not going to impact the score because of what we're doing. If we got rid of a late, it didn't impact that second inquiry. I just had a pull to show that late was gone. You can tell it didn't have much of an impact at all because I got it to 700 credit score. These are all the reason codes, all those factors, those 4 or 5 that come under each score. They come from this long list. I mean, look at number 16, lack of recent revolving. We saw that.
My question is, if the second hard inquiry you mentioned being the rescore, does the 30 days for their credit not to be affected by pools begin again with that? As an example, I have a client that had a rescore done, and then following that, they did not, what came back, they are questioning what that particular lender said the new credit score was. So they want to have their scores run again by a different lender. Will their score be impacted if the other lender runs it?
So the 30-day window is a revolving 30-day window. In other words, let's say I pull a report on August 1st. Mm-hmm. And then I pull a report on August 15th because I did a rescore. You're still within 30 days, right?
Right.
Then from the 15th to the next 15th, you see what I mean?
Yeah.
So that now it started a new 30-day window from the 15th to the next 15th and so on. If you got to that other lender and you're still within the 30 days, but please just keep in mind that an inquiry has very little effect. In 30 some years, I've never seen an inquiry drop a score more than a few points. I just think people really freak out about inquiries. The other thing with revolving balances, I have a lot of buyers that use one credit card for everything because they get points and they get, travel rewards or cashback rewards. And that's okay, but it's hit or miss when you apply for a mortgage. If you apply for a mortgage and you use that for everything, and it may show that $6,000 balance, even though you pay it off every month, you're getting penalized, right? So that's a reason we would rescore them, right? Because they pay it every month. They pay it off every month. And there's something on the credit report called trended data, which shows what their scheduled payment was and what their actual payment made was for the last 2 years. And it also shows the rolling balance. So it'll show high balance 0, high balance 0, high balance, but the scores don't look at that data. So that might be another reason to do a rescore. This, good question. This slide is basically the National Consumer Assistance Plan information. I mentioned that they started to address medical collections. They won't be reported until after a 180-day waiting period. Well, as you know now, once they're paid, they're going to be removed. Good information here. Another big thing that happened is no more tax liens or judgments are on credit reports as a result of the National Consumer Assistance Plan. And you can check that out at the website I have listed at the bottom there, nationalconsumerassistanceplan.com. This is what started all the movement to get rid of these medical collections once they're paid. Let me go to the last slide. Oh, by the way, there's Discover Card. They give it a one-time as a courtesy. They're removing it. So, a lot of folks will do it if you ask the right way. This was the PayPal account. He had a 620 score, maxed out PayPal, and you can see they're going to remove it because it found in your favor, but it could take 4 to 6 weeks. I don't have 4 to 6 weeks. We got rid of it right away, and that's what happened to his score by getting rid of that fraudulent account, 620 to 710. I got way too many samples in here, but I'm going to get to the last slide just to highlight a couple things I talked about earlier. So we talked about annualcreditreport.com. When you go there, it's going to say, what do you want? You say, I want my report. And I tell buyers this. It'll say, which one do you want? Say, I want Experian. It'll take you to Experian's website and ask you 5 security questions, which you have to get right if you want to get the report online. After you get the report, it gives you a report number that you can take here and say, this isn't mine, this isn't mine. Then you go back to Annual Credit Report, get a free copy of Equifax and do the same thing. So you do each one individually. There's the opt-out pre-screen we talked about and the gethuman.com, which basically tells you how to get humans on the telephone if you're having a hard time reaching someone on the telephone at a bunch of different companies.
Thank you for watching. You just completed a session that we offer through what we call Growth Fridays. They are offered every Friday at 12 p.m. Eastern. You're welcome to schedule and attend the next session on our website, trainingwithbrenda.com or brendakasuva.com. We have these 1-hour workshops that are available for you to attend via Zoom, walking you through different tools and strategies to grow in your real estate business. Lastly, subscribe for you to be able to get alerts of future videos that we upload here. Be successful. Take care.